All right, what's going on? I wanted to shoot a quick video, really about risk management, and a lot of traders wonder why they're just not consistent with their trading, and really it all comes down to one thing, and it's probably not what you're thinking. It's not the perfect strategy. Actually, has nothing to do with the strategy. The strategy you could probably pick pretty much any strategy that's out there on the market, and if you have good money management and risk management, you can probably turn any strategy into a winning one. Now, obviously, when you have a proven strategy that works with money management, you're just going to dominate, right? So that's the training that I've actually put together. So after watching this video, if you want to get access to the strategy that I teach, along with the money management techniques that I teach a little bit more detail, I'm going to go into it in this course or in this video rather. But if you feel like additional training and getting access to a proven strategy would help you with your consistency, I'll drop a link somewhere around this video, or you can message me on Facebook or Instagram, wherever you're watching it, and I can get you access to it. You just click the link, one-time payment, boom, you're in, go through the training, and you're off to the races. But let's focus on money management right now. And what I see is a lot of traders, what they end up doing is they're just trying to look for a high win rate, you know, strategy. And a lot of times when you see things advertised like 90% win rate or 98% win rate or even like over 80% win rate, you got to take into consideration how much are they winning versus how much are they losing. When you hit that losing trade, is it more than the winner? So if they're winning, let's just say, they're risking $100 to make 50. If you're making 50, 50, 50, 50, but then you lose 100 or you lose 200, that means your losses are bigger than your wins. So even if you have a high win rate and you win a bunch of little trades, that one big loss kind of wipes out that whole win streak. So what you want to really focus on is anytime you're getting into a trade, one, define your risk, right? Make it always 1% or always 2% or always 5% of your account. And instead of going after a smaller win, make sure you're going at least 2 times whatever your risk is. So let's just use that example. Let's say you're risking 1%. Your smallest win should be 2%. So 2R, right? 2 times your risk. If you do that, if you just focus on that, really with any strategy, you should see a dramatic increase in your overall capital gains over the course of a given time period, right? You have to have a big enough sample size. If you go in there and take 20 trades, risking 1% and targeting 2%, do that for the next 20 trades, and I promise you'll see a dramatic impact, a dramatic difference. Now, you pair that with a proven strategy. The strategy that I teach is hitting around 70% going 2R. So if you got a solid win rate plus good risk management, you can dominate the Forex market. And I have a couple trades pulled up on the chart. Very simply, you could see that this is all based on supply and demand. So when you see this push up, you have this zone that's created. I teach you how to find these zones. I teach you which zones are the best to trade from. But with that being said, I got in right around here, which is right on the last push down candle. You can see the entry right here. And I set it at 2R. My stop was below these. So I'm risking, let's say for example's sake, 1% of my account to make 2%, right? Now, you can actually back test and mess around a little bit to see what would actually make you the most money. Now, as you increase the reward, right, as you go from a 2R to a 5R in this case, you're going to naturally decrease your win rate. You're going to win less trades, right? It's given. But again, you have to backtest your own strategy because I don't know how you're trading. But if you backtest your strategy, a lot of times you'll see that you'll end up making more money over a given week or a given month or a given time period by increasing your reward. So taking it from 2R to 3R or 5R, you may win less trades, but you actually might make more money. So you have to actually just do your own back test, mess around with that, find that sweet spot. For me and my strategy, my sweet spot is about 2R. So that's what I focus on, and that is my strategy. But with that being said, like I said, you can find these really, really good setups to help maximize your gains, minimize your risk. So take a look at your own strategy, backtest, redo the trades you've taken over the last, let's say a sample size of 20 trades. So go look back over the last 20 trades you took and change your risk reward to at least 2R, and then test it with 3R and test it with 5R, and look at the difference. How much would you have made if you were going for 2R, 3R, and 5R? Find which one hits your sweet spot and makes you the most money over a given time frame. I hope that helps. I hope that goes a little bit more into how you can actually become consistently profitable no matter what strategy you choose. And like I said, if you want to dive into and get access to the strategy that I teach, it's all around supply and demand, has a really solid win rate going 2R. I dive into more detail about which zones to trade from, how to find them, what pairs work the best, and more into money management. If you want to dive into that, click the link, get instant access. If you have any questions, just hit me up or drop a comment, and I'll be happy to get back to you. Happy trading.